Today, we're exploring Oracle, a company standing at the crossroads of fear and opportunity. Let's start with what's been driving all the recent fear. Data center capex. Oracle has been aggressively expanding its data centers to get ready for the AI revolution. This isn't just about building new facilities. It's about a massive investment in GPU servers, networking, storage, cooling, and top-tier security systems. They're building the fundamental infrastructure for the future of AI. The problem is, these investments are so huge that the short-term financials don't look pretty. Debt has gone up, and at times, free cash flow has dipped into the negative. Naturally, this triggered alarm bells. Headlines started popping up, calling the debt dangerous and the spending reckless. This negative narrative spread like wildfire. But let's ask a critical question. What kind of debt is this really? There's a massive difference between borrowing money just to stay afloat and borrowing money to fuel growth. Oracle's spending isn't defensive, it's offensive. It's a strategic expansion to support AI workloads for customers they've already won and the many more they expect to attract. Then another story added to the fear. Reports suggested that Blue Owl might be stepping back from financing a data center project in Michigan. This led to immediate speculation. Is Oracle having trouble funding its expansion? But in the world of large-scale projects, it's quite normal for investors to change, partners to shift, and financing structures to evolve. What really matters isn't whether one financing partner changes, but whether customer demand disappears or the project itself falls apart. In this case, neither of those things happened. Still, the simple phrase, investment withdrawal, was enough to spook the market. Another major concern has been the huge OpenAI contract. Given the sheer size of the deal, some have questioned whether OpenAI can financially fulfill its end of the bargain. The logic is simple. If OpenAI runs into trouble, Oracle's data center revenue could take a hit. There's some truth to that concern, but it oversimplifies the picture. OpenAI is not Oracle's only customer. Governments, large enterprises, and various industries are all moving their AI workloads to Oracle. The demand is diversified, not concentrated in one place. At the same time, Google's new AI model, Gemini, has been getting a lot of positive attention. This raised a new question. Is Oracle falling behind in the AI race? But there's an important nuance here. The companies building AI models and the companies running the AI infrastructure operate on different layers of the tech ecosystem. The competition isn't always direct. In fact, the hotter the AI race gets, the more infrastructure capacity is needed, and that's a huge benefit for companies like Oracle. Now let's circle back to the debt issue. Debt becomes truly dangerous when there's no revenue stream to pay it back. But Oracle has an enormous remaining performance obligation, or RPO, reported at over $500 billion. This represents future revenue that customers have already committed to. So this isn't survival debt. It's growth-driven investment, backed by a clear line of sight to future cash flow. Despite these fundamentals, the stock had been slowly drifting lower. It wasn't a dramatic crash, but a steady grinding decline as negative sentiment and fear took hold. And then the TikTok news dropped. This was a completely different kind of headline. An agreement where an Oracle-led group might acquire around 50% of TikTok's US business. This is so much more than just an equity deal. TikTok is one of the biggest consumers of data on the entire planet. If its US operations start relying on Oracle's infrastructure for data processing, storage, security, and compliance, that feeds directly into Oracle's core revenue engine. It also strengthens Oracle's regulatory standing in the US market. They're not just winning a customer. They're gaining strategic leverage. The market's reaction was immediate. Oracle's stock shot up nearly 7% on the news. It was the first powerful, positive counterpunch after weeks of negativity. The real question now is whether this TikTok development will fundamentally change how the market views Oracle or if it will just fade away like any other headline. To answer that, we have to go back to the fundamentals. Oracle is still the dominant player in the database market. It's strategically shifting toward cloud and AI infrastructure. And in this AI era, data transactions are exploding. Think about all the generated content, recommendation engines, video platforms, financial systems, and application logs. All of it drives database activity. A huge chunk of that global data still flows through Oracle's systems. Oracle's core business isn't fragile, it's incredibly sticky. Once a customer commits to their ecosystem, switching to a competitor is expensive, risky, and incredibly complicated. On top of that stable foundation, they are now adding high-growth layers of cloud and AI infrastructure revenue. It's a classic model, a stable cash cow business funding new high-growth ventures. So why has the market been so negative? Because people tend to focus on the short-term numbers. Debt is up, free cash flow is down, and the negative headlines are loud. But in the markets, fear can sometimes create opportunity. It's not a guarantee, of course, the risk is always real, but it's worth asking, is this debt truly harmful? Or is it simply the fuel for massive future growth? And does this week's TikTok news help validate the direction of that investment? Sentiment often swings too far in one direction. It's possible that the negative story around Oracle has overshadowed its solid fundamentals. If more positive announcements like the TikTok deal follow, the market's perception could shift dramatically. This doesn't guarantee the stock will go straight up. Prices will always fluctuate, and this video is absolutely not investment advice. My goal here is simply to offer a more balanced perspective. Right now, Oracle sits squarely between fear and opportunity. Which side you lean towards depends on your own philosophy and risk tolerance. If this video helped you see the situation around Oracle a little more clearly, then I'm grateful. I'll continue to cover Oracle, the AI infrastructure space, and major global tech developments. Feel free to leave any questions or topics you'd like me to cover in the comments below. Thank you so much for watching. If you found value in this discussion, please give it a like, subscribe to the channel, and hit that notification bell. It truly helps us grow. I wish you a calm and successful day, and I hope all your decisions lead to good outcomes. Thanks again for being here, and I'll see you in the next video.